All right.
So we talked about the individual with $50,000, right? So if we look at the marginal rates, their first $11,600 will be taxed at 10%.
Okay.
Right? So again, that's way less than 22.
Right.
Right? The next $11,000 to $601 to $47,150, which equivalates to $35,000 and $549 in income, will be taxed at 12%. So a real big chunk of their income really is taxed at that 12% rate.
Yes.
And then lastly, so if we do the math, we subtract $35,000, $11,000 from $50,000. This individual has $2,851 left that's going to be subject to taxation. Only that small amount hits the 22% actual tax bracket rate.
Shut up.
Yes. So if we do the math, if that $50K was fully taxed at 22%, that person would have been paying $11,000 in taxes. However, due to the progressive tax system, their first $11,600 was taxed at 10%. That's $1,160.
Okay.
The next, $35,000 was taxed at 12%. That's $4,266. And the remaining $2,851 was taxed at 22%, which totals to $627. So their total tax with the progressive tax rate is $6,053, for example, right? So that's $5,000 less than it would have been if their full income was subject to 22% as the rate. So there's a difference between marginal tax brackets and your effective tax rate. So the $6,000 amount would be their effective tax rate. That's what they'll effectively have to pay in taxes.
That's what they would. This is good. This is good. Hey, listen, if y'all need to rewind that, rewind it. Go back and get this information, because I want you to be honest with me. Put a comment inside the comment section if you felt like, well, dang, I'm just gonna take out 22% from the taxes, because I'm like, that is wow. So you're not at the 22% technically. You're all over a little bit. Let's be real. Which is so, this is so good. This is why I like CPAs. And this is why I like working with Shanae and them, because every time I call Shanae, I say, hey, this may be a dumb question, but I'm asking anyways. And she's like, oh, it's not dumb. I'll say to Natalie, hey, this may be a crazy question because I'm the money guy, but I'm asking. Oh, it's not dumb. And then they just start explaining. Get you people on your A team who love to educate. Not just do the job, not just file the job, but while they're filing, they're educating. And I'm always asking both of them questions like, well, hey, I'm thinking about this. Help me understand what that means and why I should do that. Prime example, Natalie brought up that she brought up different options because, our income as a company, not Anthony ONeal, as a company, our income is growing up. We're blessed that we've been able to hit that, that multiple seven-figure mark. The first year we did right below seven figures, and after that we just been seven-figuring up. And so she was like, hey, we should look into C Corp, then we should look into this, we should look into that. And I was like, well, help me understand, Natalie, though, why? I don't want to just say yes because you said it. And I even challenged them. I was like, hey, I didn't hear good things about C Corps. So then Natalie went back, got with Shanae and said, hey, Anthony has some concerns about the C Corp because, correct me if I'm wrong, ladies, a C Corp is not pass-through.
Exactly, it's not.
And so the C Corp has a lower tax bracket, but it doesn't pass through to me.
Exactly.
And so I was like, I don't know. Don't know if I want to do that, because that could create some issues because I'm not the tax guy. I'm the personal finance guy. They are in the area. One of the negatives that I heard about the C Corp is owner draws are different from C Corp and S Corps. And if you take an owner draw from the C Corp, that could hurt you more than it would inside of an S Corp.
Exactly.
So I was like, I don't know. And so they went back. They was like, okay, for your situation, I think we need to do, what did we land with? I forgot.
So we ended up creating a separate entity.
Yes.
So rather than converting your existing business, which is now taxed as an S Corp, into a C Corp, we just created a new entity. Wealthy individuals, I look at building wealth in America as like a chessboard, right?
Yes.
The more pieces you have on your chessboard, the more moves that you can make, the more strategies that you can implement.
Yes.
And when it comes down to, again, building wealth, most wealthy people have like 100 businesses. They have like 50 LLCs that holds each of their real estate properties, a couple of C Corps that holds their intellectual property and some of their other assets.
Yeah.
So again, you're growing at a rate where we just need to re-strategize how your entities are also structured and then create ways for it to maximize your tax profile.
Yeah.
So the whole thought of like why we brainstormed the C Corp is because we just went over the whole marginal tax bracket rate.
Jesus.
And my guys, you know, we don't want to get you to the 30s.
Right.
We don't want to get you to the 30s.
Right.
So then it's like, okay, how can we save 15% or more by switching to C Corp?
Yeah.
So here's some of the things. So can I disclose your strategy? Is that okay?
Yeah, go ahead.
Okay. He loves y'all because it's proprietary
We can edit anything out. It
information.
needs to be too much information.
It's not going to be too much. At a high level, again, we get to the point where like we're about to net 7 figures. You know, we don't want that income to be passed through to your individual return and subject to the marginal tax rate of 37%.
That's 37%.
That's crazy.
And we got to go through all that.
Exactly.
And I mean, we're looking at that rate right now. Good God. I mean, I would get hit really in between. Yes.
Your effective tax rate is probably on track to be between, 30 to 34%.
I was about to say that.
It's too high. So
Too
then
high.
how can we
The devil is
structure
a lie.
your business? How can we structure your business in a way where some of that income gets taxed at 21%?
Yes.
Right?
What's going on, everyone? It's your boy Ayo here, and I'm super excited to share some incredible news with you. On January 22nd through the 26th, we're launching a transformative movement called Pray FYI, short for Pray for Your Increase. We're believing 2024 will be the year we eliminate debt and build wealth. So real quick, I want to give you a sneak peek into what's happening January 22nd through the 26th. I want to encourage you to join myself and thousands of others in this week of prayer as we're diving into a series of powerful sessions, each focusing on a key aspect of financial well-being. Join this movement by visiting prayfyi.com. You see, day one, we're focusing on debt reduction and financial stress. We'll be praying for wisdom to identify and eliminate unnecessary expenses, making room for your financial growth and stability. On day two, it's all about increase in salaries and business income. We'll come together and pray for guidance in pursuing career opportunities, promotions, and the skills needed to boost our income. Day three is all about increase in wealth and investment opportunities. Let's pray for discernment and wisdom. We need this in making sound financial decisions that lead to long-term, I mean generational prosperity. On day four, we're tackling boosting multiple streams of income. Together, we'll pray for creativity and opportunities to diversify our income streams, creating financial abundance. And finally, on day five, enhancing legacy. Let's pray for discernment and wisdom in making some sound financial decisions that lead to long-term prosperity. I want to personally invite you to join me on this journey of financial and spiritual growth. Listen, I can't wait to see you there. Visit prayfyi.com to get started. I'll see you soon.
The beautiful thing about working with you as a client as well is that you own so many assets. You have a lot of moving pieces. So with this specific strategy, what we're going to do is create a C Corp that's going to be in contract with your current company.
Yes.
Right? I'm not going to disclose the details of how that contract because that's why you hire a CPA.
That's
okay?
right.
But through that contract, we're able to pass some of that, those net earnings that would have been left in your S Corp to that C Corp, which is going to be recognized as revenue for that C Corp. And the thing about it is that we can also expense even more through that C Corp. And the thing about C Corps, yes, they're subject to double taxation. So this concept is pretty much provided by the fact that if you withdraw or owner's draw from a C Corp, the C Corp pays 21% taxes, but then you'll also have to report that owner's draw on your return as dividends. So it's going to be subject to ordinary income taxes. Again, so you pay taxes twice.
Twice.
However, you can pay yourself a salary from that C Corp and avoid that double taxation.
Right.
There's other ways for you to leverage that C Corp to withhold funds that has nothing to do with you taking it out as the owner's draw.
Yeah.
Or there's ways for you to leverage that C Corp and different ways for you to further build wealth and create, more of a wealth profile for yourself. So with this strategy alone, we estimate that we'll be able to save between $40,000 to $60,000 just by doing this one move. So again, shout out to your attorney. He's been a pleasure to work with. This is why having an A team is so important, because when Anthony's busy, too busy for us, we're able to communicate to keep things going along. And as long as he understands what's going on and he gets the education, he gives the okay, and we press play, and now, we'll see the results.
Right.
Seriously. I mean, and that's one thing I appreciate about having an A team is that I think I was real busy for like 3 weeks. And I think, Natalie, you just started talking with Josh automatically. And then y'all figured out what was the best plan. Then when I got the email from Natalie telling me exactly what we're going to do, I jumped back on the phone with Natalie on Zoom, and I jumped on a phone call with Josh, my attorney, and I was just asking questions. I didn't say yes. I was just like, hey, I want to make sure I know what I'm signing up for. Because at the end of the day, while they are my A team and they're my advisors, I'm still held liable for the decision.
Yes.
Right? So I wanted to make sure that the decision that I make with their advice was the best decision for me and my company, because my company impacts my team. And so I don't want to make the bad decision. So once I talked to Natalie, I talked to Josh. Shania, as the CEO of the company, was like, she texted me, was like, hey, do you have any questions? Do you have any concerns? I texted back and I was like, nah, Natalie explained it very well. I talked to Josh. He told me that's the best thing for us legally, and we're good. All this is bringing down to the common folks language, or the common folks, the average person's level. Get you an A team. Have access to an attorney that if you need to ask questions, do it. I don't really believe in the DIY corporations. Shania and her team has developed a couple of corporations for me. Josh has done all of them. He just did actually the major ones. I want someone who is proficient in that field to set it up correctly, right? And what I love is we actually just hit like a little small hiccup in one of my companies, and literally Natalie and Josh was taking care of that on the back end while I was working, because that's what they do, right? And so I really want to encourage you, because we're about to bring in my other advisor in Jamaica, who is my financial advisor, who works very closely with Shania and Natalie, because this relationship is important. But I definitely want to encourage you, before we bring in Njadeka here in a little bit, if you have a W-2 and a business, and you really want to make sure that you do right with your taxes, I'm going to drop their information in today's show notes. Every single year, we push them and we promote them, because they've saved me a lot of money. Like, I'm not going anywhere. They're on automatic withdrawal. I love Fuller Financial. And a part of it is just, they're a young, thriving business that operates legally and ethically.